Hi traders, and welcome to my video on the Elliott Wave and Fibonacci indicator and strategy. In this video, I'm going to show you how you can use this indicator to capture moves such as this one for over 200 pips and counting. Okay, it's an indicator that, as the name suggests, combines Elliott waves with Fibonacci. These are two popular, yet sometimes considered complex forms of market analysis used by professional traders. So I'm using the MT4 platform, the MetaTrader 4 platform here. I've downloaded the Elliott Wave and Fibonacci indicator free of charge online. This is a Euro-Dollar 1 hour chart. The reason I'm trading the 1 hour chart is because I find higher chart timeframes tend to have more reliable signals simply because of the amount of data that they contain within them. So I'll look at the 1 hour, the 4 hour, the daily, the weekly, and the monthly charts, and we can capture some big moves like this one. Okay, I think it's important to state that I don't solely rely on technical indicators. I much prefer price action analysis and candlestick patterns and just doing what I can see on the charts, which, I'll get into in this video. But that being said, I'll also cover ways in which you can use the Elliott Fibonacci indicator to spot some good market moves. So this is a Euro-Dollar 1 hour chart. As I said, you can use this strategy on any trading instrument, Forex, crypto, stocks, commodities, indices, bonds, etc. Okay, so effectively, as I said, the EA combines the Fibonacci with the Elliott waves. Okay, it will also, not only will it just calculate the Fibonacci levels, it will also draw them on the current wave as well. This is something that can be complex, especially for beginner traders. And interestingly, the indicator will also give you entry levels, take profit and stop loss levels as well. However, I would still use my own, to be honest with you. I'm not going to rely on any technical indicator. I'm going to want to do my own market analysis just to confirm each trade. So, and I'm also going to trade in the direction of the trend. Okay. So I'm not going to trade against the trend. Trend is your friend. So in this instance, we can see that the market is starting to make lower highs. We're in a clear downtrend here. Okay, lower highs, downtrend. So we're looking to short, to sell. And what we're going to do is, you can see around here, the price starts to reverse. Okay, we have this big downwards move here. Price has a big pullback, reverses here. Then it continues. I'll just move this line because I don't want to clutter the chart too much. And again, we get the lower highs here. And then this is when the indicator starts to kick in. It draws our Fibonacci level here and here from the high to the low. Okay. And then we can look to, as I said, we're shorting because we're in a downtrend. So we could just sell on the breakout here. Okay. And then we can use this as our target if we want. You can see that price actually does reverse around that level back up. Okay, so that would have been a potential target. However, I wouldn't have closed all of the position personally. I just do the chart like that. The indicator is suggesting this is a target. As I said, I wouldn't have closed the position regardless here. Instead, what I would have done on the breakout below this line here, okay, is if we had taken that position, okay, my initial stop loss would have been above the high here. And then as price continued to fall, I just trail my stop loss above the high here. And if the price does continue to fall down again, my stop loss will just come above this high around here. Okay, and that way we don't need to necessarily close out on each target. You can close part of the position or even alter the position if you want. I just prefer to let the trades ride. For examples like if we go back here, you see this downtrend here. Okay, had we, we can see nice triple top formation there. Okay, support level here, breakout to the downside, pullback here, and a big breakout here. And had we taken this breakout trade, certainly would have been that's a nice M pattern there as well. Just zoom out. Had we taken this breakout trade here, just to emphasize my point, if the target was here or here, it doesn't matter to me. You can see the target 1, 2, 3. My target is I want to get out at the end of the move somewhere. Okay, once I start seeing the price make these lower highs, higher lows and a consolidation, then I'd consider exiting this position, which, you know, we can get potential of 350 plus pips on this move, and I'd use a trailing stop. So initial stop loss will be above this high, and then as price falls, I just use a trailing stop and place it above the high, 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 above the high. And that way, you know, if price does turn around, we can get out with maximum profit potential. Again, closing part of the position on the way down if you want, which is why I don't use rigid take profit levels. That's the point I'm trying to emphasize there. Just as I don't use rigid stop loss, because, you know, for a sell trade, it could be a recent high. And for a buy trade, it could be a recent low. So just get that in there, that I personally wouldn't use an indicator for take profit and stop loss levels. I just think it's too rigid. I like to see what the market is telling me. Cut losing trades short and let winning trades run. That way, if we do have an average 20 pip stop loss and we take 3 losses in a row, we're down 60 pips, but then we can capture a big trend for a few hundred pips and we're going to be up overall, okay, rather than a rigid 20 pip stop loss and 40 pip take profit, 2-to-1 risk to reward ratio, or 60 pip take profit, 3-to-1 risk to reward ratio. It just, if the market's offering you 300 pips, try and get 300 pips. Don't always be so rigid. In my humble opinion, you can trade as you wish. So going back to the Fibonacci and Elliott Waves indicator, as I said, it combines 2 of the top forms of analysis for the pros. So identify the trend, market making these lower highs. The indicator will also do that for you here. You see this green line, or for an uptrend, just like that, another green line as well. So it can be good for helping to identify the trend, although your eyeballs can do the same. Okay, as can a simple trend line, on your charts. Okay. And then trade a breakout in the direction of the trend. Some may also argue you can trade reversals back to these levels of support in a downtrend, or resistance in an uptrend. Resistance comes support. So that would mean once price breaks out below this level, you wait for a pullback to this line and enter a sell. But as you can see, the pullback didn't quite come to there. So this opportunity wouldn't have been on. And also, I would argue, again, I'm not going to only trade based on an indicator. In fact, for me, this is a pullback here. I'm marking that support level, okay? And a breakout of that for me is an entry. I don't need this, magical unicorn. I know Fibonacci is a good indicator, don't get me wrong, but, if I can see a support level there, I'm going to enter just as this move down here. Look at this, okay? I'm entering that breakout, and I'm sure a lot of traders are. If you look at that, let's zoom in for you. If you look at this big bar here, okay, traders aren't waiting for this level, okay? This is a level of support. This is 1 hour chart, so strong support, and you can see from that big breakout candle, traders are entering here, and you've also got your, your lower highs. Okay, this is 1 hour chart. If you went on a 5-minute chart, this would be a substantial downwards trend, I would imagine. And you also have your bearish price action formations as well within there, your bearish candlestick patterns. I have lots of videos on various candlestick patterns. It's just good to be aware of. And in my opinion, if you can learn how to draw support and resistance, draw trend lines, your candlestick patterns, and you have good money management along with good trading discipline, I think you can create a winning strategy just with those elements. When I talk about discipline, I mean, don't let fear, anger, and greed get in the way. Don't revenge trade. Don't have FOMO, fear of missing out. Don't panic. Have a plan. Stick to it. And yeah, you do what the market's telling you to do. You can capture moves like this one. Okay, so we could have been in on that breakout there. We let over 100 pips comfortably. Now stop loss would have been above this high, which is just 15 pips. If price turns around, takes us out 15 pips, we try again. If we get taken out for another 15 pips and go again, we'll eventually capture a big move and make back those pips and some more. And again, it's better to be in at this position than, waiting for a breakout of that line, which is still a good trade, don't get me wrong. If you just want that additional confirmation, that's fine. Or getting in later, you don't want to sell too low. The earlier we can get in on a trend, the better. Sell high, buy low. So don't want to sell at the bottom or buy at the top, do we? Okay. Traders will try and trade reversals or counter trend trade. As I said, this is a downtrend. You can see the green line here. Okay, so there will be traders who will look to buy on a reversal. So they may see a downwards move like this, price around this Fibonacci level starts stalling, starts to move upwards, and it's almost formed a line of support. You can see on this line here, okay? And we've had a breakout now of this line, this trend line, and you can see that's quite a lot of momentum to the upside as well. We are around the London Open, and this is the euro dollar, so there is plenty of activity going on. And we might see a breakout to the upside. It'd be interesting to see over this resistance level now what price does. If it does turn around, again, it could be a potential breakout trade of this line here. Okay, more so than this initial trade, because the line would have been tested 1, 2, and then on a third breakout, I'd anticipate it to drop. Just as you see when we had this drop here, it had been tested and held up there and there. And then third time lucky breakout, but as I said, opportunity there. Arguably up here as well. For the aggressive traders out there, they may have seen this move up here and then a breakout to the other side. That support then becoming resistance. You've got your inverted hammer candlestick pattern there. Okay, bearish, and a breakout of that support level there. Could have been even in earlier as there if you wanted to be more aggressive with your trading. But as I said, this indicator, I personally feel like it can clutter the chart. This is just my opinion. I can see why it would be beneficial, but if we just remove it from the chart, okay, and now we look at this, and you may look lost at first, but if we just break it down to the simple things, okay, so resistance, okay, trend, okay, probably, let's just say we are seeing that breakout there, aren't we, at the moment? Okay, it's trend line, and we're in a downtrend, okay? You could be looking to jump in on this, buy at the low, it could be a good trade, but if price continues to fall, it won't be. What I would do personally is I'd wait to see if we do see a trend to the upside form, then I will look to jump in on the trend, but I'll first wait for confirmation. This is a bit aggressive for my taste. I'm looking at this downwards trend, and then when I know we're in this downwards trend, I'm just going to do exactly what we did just now. Nice wedge pattern, consolidation, breakout to the downside. Same again, wedge pattern, pullback, breakout to the downside. Okay, pullback, downwards trend, pullback. Support becomes resistance, no coincidence. Okay, all of the signs are there, and we didn't need no fancy indicator to do that, did we? Nope. Just as if we go back, to the example over here. Okay, when we have the triple top support, you see on this, so at our resistance, our support, we had a breakout, we had a pullback, downwards trend, market's making lower highs, trade on the breakout, same thing, trade on the breakout, support becomes resistance, downwards trend, M pattern, breakout, that's a big breakout, but that is a NFP, non-farmers payroll, first Friday of the month candle, which we could use that momentum to hop in on this down trend. Regardless, again, same thing, support, breakout, support becomes resistance. Okay, you can just ample opportunities to enter on this trend just by trading breakouts of support all the way down. You don't want to end up selling too low. You don't want to sell at the low, obviously. Might get caught in a bear trap. So once you see price start making these higher lows, you might want to consider just exiting the position if you haven't been taken out with a trailing stop. But as I mentioned, we could have trailed the highs all the way along here. Okay, maximize that move, and hundreds, 350 plus pips at least. Okay, with a stop loss above the high here of what, 15 pips. So there you go. And all we needed was price action trading. We didn't need the unicorn or crystal ball indicator for that. Support. Market's making higher lows. So what do? We're going to look to buy into an uptrend. Wedge pattern, resistance, breakout. You can see this big breakout candle. Traders are watching these levels. Same thing here. Okay, resistance, breakout. We're in an uptrend, so all we're doing is waiting for a pullback, drawing a resistance, breakout, pullback, breakout. Look at these big candles, big candle, big candle, big candle, all around the breakout. So do you think that's a coincidence? Okay, even there, by now we're starting to think we're quite high up. However, breakout there, and in fact, this resistance, another breakout there, and perhaps with these higher lows, there's still some left in the tank, and you can see, just zoom in there, you've got a bullish hanging man pattern. Final last breakout there before, when the market starts consolidating and making these lower highs, consider taking all of our position if our trailing stop hasn't taken us out in the meantime. And trailing stop again, initial stop loss just below the low here, so around 25 pips, decent for the 1 hour chart time frame. And just trailing stop below the low, below the low, below the low, below the low, below the low. Gonna maximize this move for, over 200 pips. Okay. Don't need to fight with the 1 minute or 5 minute charts when we can capture big moves like this. And in my opinion, we don't necessarily need no fancy indicators. Although I have given you various ways in which you can implement the Elliott Fibonacci indicator into your trading strategy. So hopefully you found something useful in this video. I do appreciate you watching. If you can like and subscribe, that'd be great. And I hope to catch you on the next one.